Good morning, traders, and welcome to Phoenix Blues Morning Update. Hope you're all well today and enjoying this fine morning. My name's Nishal Patel, and I'm going to be giving you an update for today. Just taking you through the global indexes, the key announcements for today, how the markets panned out yesterday, and just give you a running order of potentially what we're looking at for the rest of the week and what's important to us here at Phoenix Blue. So kicking off, let's have a quick look at the global indexes at time of recording. Pretty much everything looked to be down. The Asian markets and equities, especially out there, have been sagging a substantial amount, obviously off the back of yesterday's key announcement at 7 o'clock GMT or BST, I should say, out stateside from Yellen and the Fed. Obviously, after 2 days of meetings, they've come to the conclusion that the data coming out stateside is good. There is no need for a hike, but most importantly, what we've been told and what we've understood is that at the next meeting in September, there potentially will not be another hike. Now, that's obviously taken its toll on the markets. Very, very much a risk-off scenario where people are coming out of a lot of their positions, in particularly the equities. Let's not forget, I should say, that in many of these markets, they've been buoyant and been very bullish over the past few weeks, and we should have seen some kind of correction. So a part of it can be contributed to people taking profits and buyers turning into sellers and taking profits right now. But most certainly, as we can see, even our indexes here in Europe, they are closing down, and they've opened up, and we'll have a look. We'll have a look at one in a brief moment. In fact, let's go straight there now. This is, in fact, we'll come back to the yen. First, the first chart I think I'm going to bring your attention to is an index. We're going to have a look at the FTSE right now. This is having a look. This is a daily time frame. As we can see, it's opened up, has gone up a little and come down, and we'll see a little more if we have a look at an hourly time frame, like so. We can see that spike here off initial opening and pre-market trading. You can see it was slightly down, and then slightly very much a mixed bag. So uncertainty on the marketplace right now, especially with what's happened yesterday. The markets are going to be turning their attention to the yen and the announcements coming out tomorrow. Very, very big announcement from Japan and the central bank over there. Everyone's going to be looking to see the stimulus package that they've concocted. Remember, this is something that it's been in the making for a number of weeks, and we have touched on it on previous market updates. And most certainly, the ProShare members will have a good understanding of what kind of stimulus package will come about, and most importantly, what effect it will have on the market. But a big mover last night. I'm just going to switch straight over to gold right now. We can see right now gold has come off this trend line that we had highlighted earlier on last week. Remember, it was an extension. That trend line was an extension of the symmetrical triangle that gold had broken out of. But going back to this hourly or 4-hourly time frame, let's have a look at this hourly time frame. As we can see, it's just double topped off this trend line right now. Had come about and has hit a high of 1342.96 or 1344 almost. Doing really well. It's at a what looks to be a 2 to 3 week high. Having a look at this, so it hasn't been in this region since mid July. So it's at a 2 week high right now. Gold is obviously people are turning their attention to gold. Remember, gold is a non-yielding asset, but the cause for this spike really is the FOMC and what's happened out there. Remember, um, the Fed has not given a hike, which obviously has a take on interest rates. When interest rates are high, people turn away from gold, obviously because it is a non-yielding asset, and investors see more potential in trades where the interest rates are better. I wouldn't say trades, but let's talk about instruments instead. Right now, obviously, with no indication of when there would be a further rate hike, potentially investors are piling straight back into gold, and that's why we've seen this spike. It's really come off that 1319 level again. That was highlighted earlier on, well, last week, and particularly earlier on in the week, especially to the Protege members from myself. We we should be looking also at treasury yield bonds, especially the 10-year notes, because prices were slightly higher overnight, and they've pulled back a little now. Um, the big one that I think we should all be looking at and focusing our attention right now is the yen and the yen crosses if you're trading forex. So we're just going to flick straight over to the yen right now. The yen right now is trading at 104.75 circa. This is a daily time frame. We're just going to scale down right now onto this 4-hourly time frame. We can see it sitting on this Fibonacci level just below the 100 and 200 moving average on this time frame. The 382 Fibonacci is acting as a support right now. It's propping up. It's literally propping up price action. But let's not forget, everyone's going to be waiting till tomorrow to see that. Obviously, with many traders and investors preempting policy out in Japan, and the stimulus package that's looking to come about, and we should probably see this move. So finding a good entry point early and keeping your stop safe would be key to a good trade. If you are looking to trade during the news or through the announcement, if you think you're comfortable enough or you're strong enough as a trader, and then moving your stop or adjusting it accordingly, so you're taking the risk off the table, would be very advisable, because you would see a certain amount of volatility early, just prior to the announcement. So don't keep your stops too tight. You will most likely be taken out of the trade. So if you are looking to trade, shifting our attentions over, we're just going to have a quick look at crude, because again, that's pretty much been the biggest mover for this week. Crude, or we're looking at WTI right now, is sitting below the $42 a barrel. It's at 41.95 circa right now on WTI. This is a 4-hourly time frame. We can see we've broken through the levels, and it is on this chart in particular. It looks like it's trending very nicely. But obviously, if we skip over to slightly larger time frame, we can see that it had broken out this area of consolidation that we were looking at last week, and has come down, potentially looking for some degree of pullback. Excuse me. But let's not forget, a lot of the commodities right now are trading directly off the dollar. The dollar itself is acting as almost a single market, or as a tradable instrument in its own right. Everyone's looking at the dollar index, and in particularly out in the East, they're trading the dollar in its own right. So rather than having a look at WTI or crude or Brent, whatever you may be trading, instead of just looking at the fundamentals of production, of limitations on production or an excess of production, OPEC announcements and agreements, and earlier on in the week we obviously had inventories that were a lot higher. Rather than just looking at these fundamentals, what you should also be looking at, which is really key right now, and I think every trader that has any kind of NAS is looking at the dollar, because the dollar really is forcing the hand on many commodities, in particularly this one. So if you're looking to get in onto this trade, right now it's a little far. I would say it's a little far fetched. If you were looking to get onto this right now, it's the trade has moved away. You know, the train's left the station effectively. You're going to have to wait till next week before you find a valid entry point. I would say that's safe. Obviously, if you're an intraday trader, I'm sure you could take a trade and take small profits off this. But as we can see, just scaling down to this 1 hourly time frame, we could probably go down even lower, and you could see the degree of moves that are there. Um, the likelihood of you getting stopped out on many positions are going to be quite high, unless if you're dissecting your chart accordingly, like I have on this. Please be aware that the pink levels of support and resistance that I've highlighted, or these magenta colors, however you like to describe them, purple, whatever color you see, they are off a 4 hour time frame. Okay, just for me to get a little more understanding on the levels on a slightly smaller time frame as I work my way down. Obviously, the key levels are highlighted in a slightly different color. It's just for you guys out there that might have any questions in regards to those levels of support and resistance. So, guys, remember we're looking at a fairly a broadly weaker US dollar towards the tail end of this week. Off the highs that we saw earlier on at the start of the week in the DX, where we were pushing well over 97, going into high 97s. We are in the mid 96 right now on the DX. So the dollar has come back a fair amount. And all attention right now, and all the heads are pointing towards the BOJ and what they are looking for tomorrow. So just to keep things safe, I would say try not to overtrade today. If anything, try and stay away from the market. Let the markets do their thing. Let the corrections happen. Potentially look for entries tonight. If you are new to trading, I would avoid trading at all costs, and potentially have do your analysis over the weekend, and then find a way in for next week. Okay, guys, hope you've enjoyed today's video. Until next time, it's Nishal Patel signing off. Have a very good day. Happy trading. Goodbye.